Hello viewers, I am Abhinav. I'm here to take you to the world of accounts. In my videos, you will visualize the concepts of accounts to not only score good marks but will apply the same in real world. In today's class, we will cover the following topics. 1. Meaning and objective of accounting. 2. Accounting process. 3. Recording. 4. Classification. 5. Summarizing. 6. Analyzing. 7. Reporting. So, let's begin with meaning and objective of accounting. Let's search definition of accounting. Let's see what the whole world thinks about the word accounting. Here is the result. Accounting is the process of recording, analyzing, summarizing, and reporting financial transactions for a business or individual. It involves tracking revenues, expenses, assets, and liabilities to provide a clear picture of a business's financial health. Accounting is the process. But what do we mean by process? Well, a process is like a language. It's how we express financial information. But what does that really look like in practice? Let me explain with an example.
Hello, Uncle.
Hello, Ansh.
Uncle, is your name is 7-Eleven Snacks?
No, Beta. That was my shop name, not my name.
What is your name?
My name is Rajkumar.
So, why is your shop name is 7-Eleven Snacks?
Ansh Beta, 7-Eleven Snacks is my business name. If you visit the store after 4 o'clock, my son will be handling the shop. So the owner will change for that time, but the business will remain the same.
Yes, I got it. A business is separate from its owner.
Here we have seen that business is different from its owner. So, how the business will speak and in what language? As we know, different people around the world speak different languages. But for accounting, we cannot use different languages. As in, the global world use of accounting is same. But we all are connected globally as people are selling goods from different places and buying from different places. So, we need a common language where books of accounts or a business will communicate things to us. Us, who? The investor, proprietor, banker, customers, creditors, debtors, banks, government, etc. I know those words are not familiar to you guys, but trust me, you will all know very soon. So we learned that accounting is a language to understand the business transactions. Accounting is the process of recording. Recording. What is recording?
Hello, Uncle. I need a pack of pasta.
Okay, Beta, I'll get the pasta pack for you and enter it in the computer. Okay, Beta, here you go. It's $10 for one pasta.
Here's $10, Uncle. Thank you.
Dear viewers, please note that the name on the invoice is 7-Eleven Snacks, the business name, not the owner's name. Here business is telling their customer that I have sold a one packet of pasta for $10 and you need to pay the business $10 against this invoice. There is another way to record transactions. Let's see an example for better understanding.
Hello, Uncle. I need a pack of pasta.
Okay, Beta. Here, Beta, your one pasta pack for $10. Let me write this in my register.
Here's $10, Uncle. Thank you.
See, this is what we call recording of transaction. Business transactions were recorded in the Memorandum of Journal. These are the common transactions in a grocery store. 7-Eleven Snacks is selling goods and paying expenses. 1. One packet pasta sold against cash $10. 2. 1 packed milk sold to Miss Bushra. $5, 3 one-packet bread sold to Mr. Tarun. $2. 4. 10 packets of pasta purchased from Mr. Pradeep amounted to $80. 5. Check paid to Mr. Pradeep for $80. 6. Cash received from Ms. Deepa $20. 7. Cash deposited to bank $100. 8. Rent paid to Mr. Umesh $10. 9. Salary paid to Miss Shrankla $5. 10. Wages paid to Mr. Rohit $3.
Hello, Papa. May I come in?
Hello, beta. Yes, of course.
Papa, what are you doing with those registers?
Beta, I am entering business transactions in related business registers.
Why are you doing this repeated work? As transactions are already recorded in Memorandum of Journal.
Okay, beta, I'll explain you in detail. This is the business cash register. Here, we record all the cash transactions. Non-cash transactions are written in the Memorandum of Journal, but it's hard to know the exact cash balance from that. The cash register helps me see how much cash I've received during the day, how much I've paid out for different things, and the current cash balance. You can't find that in the Memorandum of Journal. That's why it's important to keep transactions separate. Now, this is the creditors register. It shows the amounts we owe to our suppliers, the people who provide us with materials. For example, if we buy things for the shop from a supplier and don't pay right away, the amount we owe will be recorded in the creditors register. This is the debtors register. It shows how much money we are expecting to receive from our customers. In other words, it tracks what our customers owe us. For example, if Mr. Rohit buys milk for $15 but doesn't pay right away, we write down that $15 in the debtors register because it's money we will receive later. And this is the expenses register. It shows all the expenses that were paid during this period. This is how we classify the business transactions into different books of accounts, also called ledgers.
My lovely viewers, we have seen that how to record the business transactions. We have understood that why we record the business transactions.
Hello, Nishant.
Hello, Anj.
I want to tell you something.
Yes, Anj. I also wanted to tell you something. But you start first.
Yesterday, I visited a shop. Shop name was 7-Eleven Snacks. Uncle, is your name is 7-Eleven Snacks?
No, beta. That was my shop name, not my name.
So why is your shop name is 7-Eleven Snacks?
Ansh beta, 7-Eleven Snacks is my business name. If you visit the store after 4 o'clock, my son will be handling the shop, so the owner will change for that time, but the business will remain the same.
Yes, I got it. A business is separate from its owner.
Oh, that means business has a separate identity and work as separate entity.
Yes, not only this, I have also seen something else.
What?
There is a way to record the transactions. Hello, uncle, I need a pack of pasta.
Okay, beta. Here, beta, your one pasta pack for $10. Let me write this in my register.
Yes. I also have seen the Memorandum of Journal in my father's accounts office. And I wanted to tell you the same.
Really, please tell me.
Yesterday I have visited to account office and Papa, why are you doing this repeated work? The transactions are already recorded in the memorandum of journal.
Great question. The Memorandum of Journal records all transactions, but it doesn't show detailed information like cash balances, what we owe, or what's owed to us. These registers help us classify and track these things clearly. This is why we use these registers. The cash register shows our cash balance. The creditors register tracks what we owe suppliers. The debtors register shows what customers owe us. The expenses register tracks all payments for expenses.
Wow, I didn't know about all this.
Here, we have seen how to record the business transactions. As in the modern time, we don't use the registers. In the modern time, we use software for accounting. But in accounting software, there were electronic registers, where these transactions were recorded in the exact same manner.
Bye, Nishant.
Bye, Ansh.
So, where were we? We were at definition of accounting. Accounting is the process of recording, analyzing, summarizing, and reporting financial transactions for a business or individual. Now, when we say process, what do we really mean by that? Well, in this context, process is like a language we use to communicate. Next, recording is writing or booking business transactions in the proper manner, ensuring everything is accurate and organized. Now let's talk about summarizing. What is summarizing? In accounting, summarizing is the process of summarizing a company's financial activity for a specific period of time. This can help businesses plan for the future by looking at what they achieved in the past. Let's understand this definition with the example of our shopkeeper, Mr. Rajkumar.
Hello, Dad. May I come in if you're not busy?
Hello, beta. Of course, come in.
Dad, are you again classifying the business transactions in different registers?
No, beta. I already entered the transactions for the current month.
Okay then, what are you doing now?
I am summarizing the data.
What is summarizing now? What is the benefit of summarizing? Why are you doing it?
Okay. Calm down. I'll let you know all the details. What is summarizing? What are the benefits? Why I am doing it? Everything I'll tell you. See, this is trial balance. A trial balance is a list of all account balances to check if total debits equal total credits, ensuring the accounts are correct. Now, see this. This is the profit and loss account. In simple words, it's a report that shows if a business made a profit or a loss during a certain time. It lists all the money the business earned, revenue, and all the money it spent, expenses. If the earnings are more than the expenses, there's a profit. If the expenses are more, there's a loss. And this is the balance sheet. It shows what a business has, like cash, buildings, etc., and what it owes, like loans or bills. It helps us see if the business is in good financial shape. This is summarization. Let's take a look at the balance sheet again. See here, the creditors are highlighted. This shows the total amount the business owes to its suppliers as of the 30th of November. In simple terms, it means the business needs to pay this amount to the suppliers. Now, the creditor register is showing us all the transactions that occurred during the month of November. Our business made many purchases from different suppliers, and we've made several payments to them against their invoices. But now, I want to see how much balance is left to pay. How do I find that out? Do I need to total everything in the register?
Yes, we can total each register.
Yes, we can total each register. But to know the balances, we should open all the registers. That will consume more time though, right?
Yeah, you're right. It will take more time.
Another problem is if someone asks me about my business bank balance, cash balance, creditors, or any other business related information, I wouldn't be able to tell them right away, as I can't carry all the registers with me. However, I can carry a 3-page summary of my transactions. With that, I would know my profit for the month, my expenses for the month, and if there are any unnecessary expenses, so I can control them.
And you don't need to carry those registers with you all the time.
Exactly. That's why summarizing is so important. Some businesses summarize their transactions every month, while others do it quarterly. That's once every 3 months. Some even do it yearly, just once a year. But you'd be surprised to learn that banks do it daily. Since they deal with a lot of cash, they need to summarize their transactions every single day. This process is called the closing of books of accounts for that particular period.
Accounting is the process of recording, analyzing, summarizing, and reporting financial transactions for a business or individual. We understood the meaning of recording, classification, and summarization. Now, what is analyzing? In accounting, analyzing involves examining financial statements and transactions to identify trends, establish cause and effect relationships, and make decisions. Let's understand analyzing by using the example of a shopkeeper.
Why is our sales down? Why are our profit margins so low?
Hello, uncle.
Hello, beta.
Uncle, may I ask you something?
Yes, Ansh. Tell me, beta.
Why are you yelling over the staff?
Beta, I have compared our sales and profit ratios with the previous period, and I found that our business sales have been decreasing compared to the last period. Even our profit margins are low.
How do you know that?
I have summarized the transactions from the previous period, and now I've done the same for the current period. This helps me analyze key points like how is the business performing? What are the sales numbers? What are the profit margins? How much have we spent on expenses like salary, rent, etc.?
Okay, but what is the benefit of this analysis?
Based on this analysis, I can reduce unnecessary expenses, motivate the sales team to boost sales, make better decisions for the overall benefit of the business.
That's great. It's really good to analyze the business transactions.
Yes, Ansh, it's the same as when your teacher analyzes your results and compares your growth with the previous one.
Okay, uncle. Thanks for the information. Goodbye.
Viewers, have you seen how important each term is in accounting? I hope you understood the word analyzing. Now, let's move on to the next word in accounting, reporting. What is reporting and who do we report to? Reporting in accounting is the process of analyzing and communicating financial information to help businesses assess their financial position, evaluate performance, and forecast future performance. Let's understand with an example of a shopkeeper.
Hello, Papa.
Hello, beta.
Papa, he is my friend Ansh.
Hello, Ansh. I know this boy. He usually comes to my shop.
Yes, uncle.
Papa, may I ask you something?
Sure, beta, what you want to ask?
What is this file? And what is financial reporting?
Alright, let me explain. In school, after your half-yearly exams, your teacher organizes a parent-teacher meeting.
Yes.
So, while your result is being prepared, your teacher knows about your performance.
Yes. Yes.
So, while your result is being prepared, your teacher knows about your performance. Like, he is good in math, but he needs some improvement in English or science. On what basis your teacher suggests me that improvement?
On the basis of our past performance.
Correct.
So, the teacher analyzes the results and prepares a report to discuss and give suggestions for improvement.
In the same way, I summarize the financial transactions, analyze them, and prepare a report so that I can discuss improvements.
But uncle, with whom will you discuss it?
Later, I will discuss it with my team. For example, issues related to sales will be discussed with the sales team.
Okay, now we understand the reporting.
Are you taking this report to your shop for discussion?
Yes, this report is also used to get loans from the bank. This report serves multiple purposes.
Mr. Rajkumar explains accounting concepts really well. As a teacher, I might not explain them in as much detail. Let's thank Mr. Rajkumar. Now we understand half of the definition of accounting. Accounting is the process of recording, analyzing, summarizing, and reporting financial transactions for a business or individual. In this video, we have discussed recording, classification, summarizing, analyzing, reporting of financial transactions. What are financial transactions? Take a deep breath, be patient, and we'll cover that in the next video. Until then, good night. Thank you for watching. Don't forget to like, share, and subscribe for more updates. For more information or to purchase the full course, feel free to reach out to us.